I think that the right way to think about Bitcoin is, and people get this wrong all the time, Bitcoin's not a stock. Bitcoin is a bank. If I had $100 in the portfolio, every dollar that's not invested in Bitcoin is dilutive to your opportunity, and every dollar that's not beating the S&P is dilutive to your wealth. And so if you really want to maximize your opportunity, you want to move as much of your liquid capital as close to Bitcoin or the Bitcoin network as possible, because it is this monetary network that's going from $1 trillion, and presumably it could be worth 100 trillion or more, because the sum total of all money in the world is maybe $400 trillion worth of stocks, real estate, bonds, and the like. Half of that is looking for a store of value. And the other half, honestly, truly wants to be invested in stocks or bonds or real estate. We've lost price discovery in the financial universe. So the single most accretive way to use money or time is invest in Bitcoin, because you've got a once in a lifetime, once in 50 years, transformation where all of this $200 trillion of money sitting in analog fiat instruments is being encrypted and converted into a digital instrument, which is thermodynamically superior, right? That's the first observation. Time is money. Convert your money into Bitcoin or something as close to it as you can. And the second of time, well, any time you're spending analyzing, it's like go to Venezuela, analyze every company, every piece of real estate, every bond index in Venezuela, and figure out which ones you want to invest in. And the answer, Angelo, is it's all a waste of time, right? Everything you're doing, if you're analyzing frequencies of a minute, a day, a week, a month, that's a waste of time. If I told you I know how it all ends, right? Once you know how it all ends, the only use of time is, how do I buy more Bitcoin? But take all your money, buy Bitcoin, then take all your time, figure out how to borrow more money to buy more Bitcoin, then take all your time and figure out what you can sell to buy Bitcoin. And if you absolutely love the thing that you don't want to sell it, go mortgage your house and buy Bitcoin with it. And if you've got a business that you love because your family works for the business, it's in your family for 37 years, and you can't bear to sell it, mortgage it, finance it, and convert the proceeds into the hardest money on earth, which is Bitcoin. So what I would say is, use all your time to acquire Bitcoin, finance entities and weaker currencies to buy Bitcoin, or educate yourself on why this makes sense if you're not sure, and then educate everybody around you. If you're working for a company that's got $100 million in the treasury, you ought to convince the CEO and the board of directors to convert the treasury to Bitcoin. That's the most accretive thing you can do. That'd be worth billions to them. It's like if you were to say to me, Mike, it's the year 2000, you're in Argentina. What's the best use of your time? The best use of my time is figure out how to get all of my money converted into dollars and get it out of Argentina, because I'm going to lose 99.5% of the money if I don't. Nothing else matters. I used the phrase from Archimedes, give me a lever long enough and a fulcrum to place it on, and I can move the world. The fulcrum is Bitcoin. It's the hard point, and the lever is just leverage. The best idea for everybody is finance your future cash flows in a weak currency and buy a strong asset with them. But at the end of the day, Bitcoin is a bank in cyberspace with no more than 21 million units. And the value of Bitcoin is going to approach the sum of all the money that's deposited in that bank, adjusted for the fiat currency inflation rate. And so ultimately, take how much money is in the bank, divide by 21 million. If they did move, it wouldn't matter to me. If they don't move, it's better if they don't. But at the end of the day, there's 21 million Bitcoin. If $1 trillion is invested in Bitcoin, that tags Bitcoin at about $50,000 a coin. When someone buys another $1 trillion worth of it, the price is going up, and then the price is going up based upon the rate of monetary inflation because it's the safe haven. I fall in the category of people that thinks the Bitcoin network is already good enough to hold $100 trillion worth of monetary energy, and we should make it better carefully and in a responsible fashion and prudently. And yeah, it should upgrade, but it doesn't need to go fast, and it's not needful of anything to be successful. So I wouldn't rush it, but I wouldn't stop it either. I would just be very careful in moving forward.
Is this the beginning of the end of global trade settled in US dollars?
No, I think that the US dollar is going to continue to be pretty popular. I don't think it's going anywhere. I think that this is just part of the continual trend of companies adopting Bitcoin as a treasury reserve asset. It's really the beginning of the end of, if you want to look at something which is ending, it's the end of gold as a store of value. I think that there's $10 trillion of gold, and traditionally it's been thought of as a hard money, and I think that it's dying. It's being eaten by Bitcoin. And so what's going to happen is $1 trillion worth of Bitcoin is going to grow to be $10 trillion, and gold's going to return to its ornamental value as a source of jewelry and the like. And so you got to think of Bitcoin as digital gold. Bitcoin's not going to replace the dollar as the world's reserve currency, and it doesn't need to. I think people get distracted thinking Bitcoin is a currency. It's not a currency. If you know anything about tax, you know that when you move a currency around, you can't afford to incur a tax obligation. So if the IRS is going to tax you when you transfer $1 million of Bitcoin, then it makes it utterly impossible to use it as a currency. On the other hand, it makes it ideal to use as digital gold or a store of value. And that's where I think you'll see it. And what you're going to see there is more and more companies will do this. Hundreds more companies than thousands of companies will do this because it's just a logical base layer for a treasury reserve. I think there's a lot more buying than gets announced, by the way. I think that tons and tons of organizations buy and they don't announce. It's only the public companies that normally announce because they're required to by regulatory statutes. I think that the right way to think about Bitcoin is, and people get this wrong all the time, Bitcoin's not a stock. Bitcoin is a bank, right? And the price of a BTC is not the stock price of the Bitcoin company. The price of a BTC represents all the money deposited into the bank of Bitcoin divided by 21 million, adjusted for inflation. So if I formed a bank, JP Morgan, and I put $100 million in it, and I had 100 million shares, I give her, the price would be $1 a share. And if people had to buy in when it got to $1 billion, the price would be $10 a share. And if it got to be 10x more than that, it'd be $100 a share. As long as I knew that you could never make any more shares, then the share price is just going to represent, in essence, the inflation adjusted book value of the bank. And when you look at it like that, you see that in the near term, you'll have volatility, day to day, week to week. But over the long term, the real question is how much money is going to get deposited into this bank in cyberspace. And the next logical step is for all $10 trillion that's in gold to get deposited, and then for people to start to convert their negative yielding bonds and their indexes. And so as that money flows, the price is just going to go up, and it's going to go up not because it's an estimate of future cash flows. It's going to go up because there's 10x more money in the bank, and therefore the price has to be 10 times higher. Look, we had a company that was generating 75 million a year in cash flow with 500 million in cash. And we were valued at $1 billion. So we'll call it 1 times revenue plus cash. And we realized that we weren't going to need the cash to grow the business because we could do everything we needed to do over the web or via digital Zoom techniques and streaming video and the like. And we also realized the cost of capital was 25%. The Fed was printing more money, and everything that we wanted to buy, remember what I said, if you're not getting the S&P 500 return, is dilutive to your wealth. So the cost of capital went to 25%. And when you apply a 25% discount rate to your existing cash, well, that means that your 500 million is worth 100 million in 7 years. And so our existing cash balance was being debased at 25% a year. And our future cash flows were going to be discounted at 25%. And once you realize that, you realize, you could, if I work really hard, and if 2,000 people do 100,000 things right for an entire year, we generate 75 million in cash, and we lose 125 million in purchasing power in our treasury. So you see, it's literally the example of running as hard as you can to go backwards. The metaphor I give you is, we're in a rowboat, we're rowing across the ocean. The wind had been blowing a little bit in our face. We're making 4 or 5 knots. Then the wind cranks up to 25 knots. Now we're going backwards 16 knots. We're never going to make it. We're going to starve to death. What do? Well, we bought ourselves a $500 million Bitcoin sale. We put it up and we turned the ship around, and we went with the wind instead of against the wind. And we let the 25% cost of capital blow $500 million forward instead of rowing against it. Okay, well, our 500 million promptly doubled. We had $1 billion. Now, if you have $1 billion in capital and you have a 25% monetary inflation rate, you make 250 million a year in investment income. So what do? We forward finance the next $650 million worth of cash flow, because if we wait for 10 years to generate the cash flow, it'll be worth nothing, or it'll be worth 20%. So we might as well borrow now. So we borrowed 650 million. We bought Bitcoin with it at 21,000 a Bitcoin. Bitcoin had already doubled from our first move. So we bought again. Now we had about $1.8 billion Bitcoin sale. If the money supply keeps expanding at 25% a year, we're going to generate $500 million in investment income and operating income in the coming 12 months, because we're going with the monetary system, not against it. So that worked. Eventually, we had a chance to go back and raise $1 billion at 0% interest. We're paying 0% interest for 6 years. We buy $1 billion more Bitcoin. And so today, where does that end us with? Well, so today we have nearly $5 billion worth of Bitcoin. And if the money supply expands at 20% a year, that means we have a $1 billion investment gain a year. And we don't have to live in fear of the money supply expanding, because we have actually converted our company from asset poor, in essence, from a bunch of people in one of those galleys where everybody's rowing as hard as they can, dragging a 500-ton weight behind you. And we've converted ourselves into a clipper ship where nobody's rowing. Well, we're still rowing a little bit, but we're rowing with the wind now. And we've got the sails up. And if the money supply expands at 10% a year, then that's worth 500 million a year. And if it expands at 20% a year, it's worth $1 billion a year. And so the strategy, in essence, is you can't create or protect shareholder value unless you deploy your assets in a creative fashion in the face of monetary inflation.